our two previous videos, we got to know more about the income statement and the statement of financial position. In this video, we're going to look at the last of the three main financial statements, the cash flow statement. And this looks very similar to a cash flow forecast, which we have explored in other videos. But instead of showing the forecasted cash inflows and outflows and the expected closing balance, it shows the actual cash inflows and outflows. And it adds these to the opening cash balance to show the closing cash balance for a certain time period. Basically what has really happened rather than the best guess as to what will happen. I have mentioned before that it's often said that cash is king, and because of this, the cash flow statement is one of the most important financial statements for a business to review and monitor over time. Before we go any further though, let's meet our main character for this video. This is Nat Kennedy, the founder of a luxury e-commerce clothing retailer called Nattie's, which is a limited company. Nat has always worn luxury clothing and has a bit of a reputation as a snappy dresser. When he inherited some money from his grandparents, he knew the time was right to follow his dreams and create his own business selling the types of clothes that he really loves to wear. Nat specialises in handmade silk garments made by highly skilled tailors based in the Far East, and he prides himself on offering the best customer service, fast delivery, and beautiful products. His business has grown steadily in the 3 years that it's been established, and he has big plans for the future. So let's dive in and take a look at the cash flow statement for Nattie's Limited. To all the teachers out there, show all of these videos without any ads and gain access to our growing library of over 500 teaching worksheets. Why not visit BizzWizard.co.uk to find out more? Remember that a cash flow statement is a record of the cash that a business has actually paid out and has actually received. So even if a business has earned a revenue or has incurred a cost, they won't appear on the cash flow statement until the cash has either been received or has been paid out of the bank account. So let's start with cash inflows. Nattie's has 1,875,000 of inflows from sales receipts during the year. If it had received any loan finance during the year, then this would also be included as an inflow. Next, let's look at the cash outflows. Well, Nattie has had to pay its suppliers for stock, paid salaries, IT costs, the hire of the office and the warehouse space, and marketing costs. It's also bought some IT equipment and repaid part of a loan that was taken out when the business was first set up. So when this is all added together, the total cash outflows in this scenario are £1,785,000. So to work out Nattie's net cash flow for the year, we need to subtract the outflows of £1,785,000 from the inflows of £1,875,000. And this gives us a net cash flow of £90,000, which is a positive figure, and this means that the business has had more money coming into the bank account than it has had to pay out during the year. So the cash balance will have increased. The business had £160,000 in the bank at the start of this year, and this is what's known as the opening balance. So to find the closing balance, we add the net cash flow of £90,000 to the opening balance of £160,000, and this gives us a closing balance of £250,000. Bring this video and over 100 more to life with fun, interactive games, quizzes and case studies. Why not try the first 25 completely free by visiting BizzWizard.co.uk. Preparing a cash flow statement like this one that we have just examined is a great way for Nat to see how liquid the business is, basically meaning whether it is able to make the payments that it needs to or whether it needs more finance for the business. In many ways, the cash flow statement pulls everything together for Nat, as it reflects changes in both the income statement and the statement of financial position, which we have just looked at in previous video. They are all connected together, which makes sense as they are all financial statements of the same business over the same time period. So when Nattie makes a sale, it's reflected as revenue on the income statement. If it's not paid straight away, it becomes a debtor on the statement of financial position. And once it's paid, then there will be a cash inflow into the business on the cash flow statement. So when Nat took out the business loan that we've discussed, there would have been a cash inflow into the business on the cash flow statement. The loan would have also been shown as a non-current liability on the statement of financial position. Over time, as Nattie's Limited repays its loan to the bank, this will be seen as a cash outflow on the cash flow statement. The amount of loan will also reduce on the statement of financial position as it's being repaid. So don't forget that part of the loan repayments to the bank will be the interest on that loan, and the interest will also be shown as a cost to the business on the income statement in the section between operating profit and net profit. Each of the video courses over at BizzWizard.co.uk also includes an interactive business case study that applies the knowledge learnt to a real-world scenario. There are over 1,000 multiple choice questions, each with detailed feedback, which tests students' understanding of the content. Why not visit BizzWizard.co.uk to find out more? So over these last few videos, we've discussed many of the benefits of creating and examining financial statements. But there are, of course, some disadvantages and some difficulties that you may experience. The main downside of preparing financial statements that comes to mind is the time and expertise that it requires. Even if Nat can do some of the basics himself, as a limited company director, he'll likely need to use an accountant to prepare the official accounts for filing at Companies House, and to calculate and file the tax returns before the legal deadline. The cost of this will depend on how big or complex the business is, but it's a cost that entrepreneurs like Nat will need to make sure that the business can cover. And there you have it. It's essential to make sure that you understand the purpose of each of the main financial statements that we've covered over the last few videos: the income statement, the statement of financial position, and the cash flow statement, and that you can explain what they mean and their importance to the business. You will also need to understand how they are all linked together and how changes in the business will be reflected in each of them. Without a doubt though, for any entrepreneur, the ability to analyse the financial position of your business will be extremely important if you hope to be successful, and being able to create these financial statements will give you the data that you need to be able to do this. This has been the BizzWizard. See you in the next video.